our goals is we track monthly what percentage of our members fall into that low income bucket, and we actually have goals around that. So if we were ever getting a situation where we're only doing a loan segment for a higher income population, for example, that would be a problem for us. We would pivot, and we would pivot quickly because we're tracking that monthly. We know month by month where those numbers are falling. I'll give you a very in the weeds example. We had a large commercial loan that came up last year in one of our service markets. And my first question was, hey, this looks like a great loan. It's going to make us a lot of money. But is this going to skew us from who we are? Is this going to put us, because of the sheer volume size of this loan, is this going to put us in a group that we don't want to really be in? We want to be in this low income to moderate income group because that's who we are. That's who we've always been. I feel like it's a huge, huge need, especially here in Southeast Louisiana.
The truth about financial institution mergers is that they either paralyze organizations or accelerate them. There's rarely a middle ground. Jared Freeman, CEO of OnPath Credit Union, chose acceleration. This conversation is not about transformation theory. It's about the decisions that allowed OnPath to move fast when most institutions freeze. Jared shares how they leveraged data to deepen relationships, strategically selected technology partners, and maintained community connections while growing rapidly. For leaders wrestling with scale, digital expectations, and organizational change, this is a blueprint grounded in actual execution. I'm Jim Roos, and this is the FIsionaries podcast, sponsored by Alchemy. So, Jared, before we start, can you tell us a little bit about yourself and OnPath Credit Union?
Yeah, happy to be here. Thanks for having me, first of all. My name is Jared. I am from a small town in Alabama. I've had the pleasure of serving as the CEO of OnPath now for 6 years, based here in the New Orleans area of Louisiana. It's been a wild ride. I started in the middle of COVID here, and so you can only imagine the transformation and the change that we've had here since the beginning of 2020. I've been in credit unions now for 21 years, which is kind of hard to believe. I started as a part-time teller at 16 years old at a $60 million credit union in my small town in Alabama, and here I sit today. So it's been a super rewarding career. I just absolutely love it. I'm one of those weird people that I've known what I wanted to do my entire life, and I've never deviated from that. My wife says that's unusual, but for me, it's normal, and I just love it.
Well, it's interesting because, as you know better than anybody, you don't have to change careers to experience change. The reality is the banking industry that I grew up in, which is 50 years ago, actually changed very little. But over the last 10, 15 years, and especially in the last 5, everything's being disrupted. And you either have to determine that you're going to stick with what's worked, which is a path that some take, or continually disrupt yourself to meet the changes that are going on in the industry.
I was making this joke the other day. My first year in the credit union, our marketing was a newsletter, right? We paid for a newsletter to go out in the mail, and we would run 2 or 3 loan promotions a year, and the business just came in the door. And those days are long gone.
Well, actually, I started pretty much in the marketing area, just mindset, even though I started in the branches for the first 5 years. But the reality is the same thing. I then moved to direct marketing agency that served financial institutions. So same thing. We're doing newsletters. We're doing things like this and everything has changed so much. So let's get into the merger between OnPath and Louisiana Federal Credit Union. How did you turn that moment of change into a catalyst, and what inspired the merger overall?
Yeah, I know in our credit union industry today, mergers is kind of a polarizing phrase or term. Some people view them as the end of our industry. Some people are hyper focused on being bigger for big sake. And I have to tell you, neither are true for us. We adopted a strategic merger approach a couple of years ago. and decided, we wanted to merge with other like-minded organizations for the purpose of being better and being better for our members. And that's exactly what the merger with Louisiana Federal was and has been. Now going on almost 2 years. We merged in 2024. And so for us, it was all about how do we take the best of both organizations, put them together, and deliver a value proposition for now our 90,000 members that's even greater than we were individually.
Actually, from what you're saying, you didn't just change Louisiana Federal Credit Union, you changed OnPath as part of that.
Yeah,
So
it's a new OnPath. Yeah, new OnPath completely. I mean, we were very intentional with every step of this merger. We didn't keep the logo of OnPath. We didn't keep the logo of Louisiana Federal. We made a new one. We really wanted to create a new organization.
so that's exciting because unlike a lot of mergers, you really through this deliberate thinking made it so there wasn't a winner and a loser. It was taking two organizations and making a big winner.
Absolutely. For us, again, we were already going through a roadmap of how do we innovate digitally, how do we, convert to a new core, a new online banking system, et cetera, to provide better services for our members. We had the benefit and quite frankly, luck that Louisiana Federal already had a core processing system, and they already had Alchemy, which was sort of on our top list. And so it was just really a perfect marriage.
So when you look beyond the merger itself, what vision did you have that guided you, not just for growth, which was going to happen automatically as you brought two organizations together, but to build the kind of financial institution that you wanted to become as an individual, but also as your leadership team?
Yeah, again, best of both worlds, right? We wanted to take strengths and weaknesses, combine them together to be strengths. And so Louisiana Federal had great strengths in their retail branches. They really had dug into the communities they served in their branch network and had developed wonderful relationships. They had strengths in lending that we didn't have at OnPath. Conversely, OnPath had a lot of strengths in commercial lending and mortgage lending. We do a lot of CDFI work here at OnPath. We are a low income designated credit union, a very proud CDFI credit union. 74% of our members, in fact, are low to moderate income. And we take pride in that because we embrace our credit union mission and philosophy. And I'll always like to joke with people that in that sense, I'm a very traditionalist in credit union land. I actually still do believe that credit unions serve a niche of serving the underserved. We do that here at OnPath, and we've done that for 65 years. We've done it really, really well. And so we really merged all that together into a new OnPath that now has new technology, and we can continue to double down on our efforts to serve members.
It's interesting. A lot of times mergers get really overwhelmed by the technology that has to change, by the back office that has to merge, by all the zeros and ones that have to look right between both organizations. That usually stifles innovation, stifles growth, stifles the mindset because we're all so focused on making sure that the next transaction is processed well. But OnPath seems to have accelerated innovation and really changed while changing. How do you keep that going forward where you actually turn complexity into momentum?
Yeah, so you have to go back to the foundation, and the goal is not to be bigger. The goal is to be better. And I think by being better, you become bigger. It's a byproduct. And so hyper intense focus on having the right people in the right seats, doing the right things, having the right focus, having clarity of goals. We do pride ourselves on having really good communication, strategic plan processes here. And we have a high accountability culture because we understand what's at stake. We understand the 74% of our members who are low to moderate income, who we are their lifeline. We are their life source of conducting financial business, be it transferring money, buying a new home, creating generational wealth, whatever the case may be. We take that seriously, and we have the approach that we are here for our stakeholders. Those are 90,000 members, and so that motivates us. That gives us a lot of passion, and so it was clear up front. Hey, the merger is is going to derail some efforts, right? It's certainly going to derail some other priorities, but we're only doing this so that we can speed up. And if we can't pull that off, we're not going to do it. And so for us, it was just intense focus, alignment of goals, high accountability, and then really making sure we had the right people in the right seats dedicated to running the projects, dedicated to Alchemy, dedicated to Jack Henry Scimitar, whatever the case may be. It's not easy, but it's not complicated either. So people get those two confused often, I think. It's a simple problem that doesn't necessarily mean it's easy to pull off. Of course, we made mistakes along the way. Things that maybe in project plans that I wish had gone differently, members adversely affected for some short period of time that I wish wouldn't have happened. But for us, it was all about intense clarity and high accountability.
So you brought it up. We made mistakes. As opposed to looking at them as mistakes, what are the biggest surprises you had from the standpoint of the difficulty or a challenge that you didn't expect? And what was on the alternative? Was a surprise that happened that was really kind of like you felt like that's kind of like a stroke of genius, more by accident than by
Yeah.
focus. So
I would say it wasn't a surprise. It was the volume that surprised us, but not what happened. And that is inevitably it goes back to members calling in because they don't know how to work their own phone. They don't know how to work their own device. And so you're going through some kind of system conversion, and lion's share of our phone calls, of which there were many thousand phone calls for many days consecutively. I don't know how to download the new app. I don't know how to update my phone to get the new app to work because, we had members using the original iPhone, for example, back from 2006. And some of the advice was, gosh, I don't know how that phone is still working from 20 years ago. Maybe you need a new phone. I don't know if this is going to work. And so there was just a lot of that, and the volume, I think, of that caught us a little off guard. We felt like we had a really good plan. We had increased manpower in the call center almost threefold for the first month after a lot of these system conversions. And we had contingency plans and all those types of different things, talking points, you name it. But the volume was certainly overwhelming. Every single person did get a call back for sure. It wasn't a call back in a time frame that I would have liked in the beginning. Some people were going days without getting callbacks, but we probably had 7,000 phone calls the first day we went live.
Holy crap.
Both our system conversion and our online banking conversion, which did happen on the same day. And so that was overwhelming. We answered overwhelming majority of those calls and called those people back the same day, but the volume was huge. Unintended consequence actually was we saw digital engagement go up. Because of the change, it prompted people to actually, well, you know what? I haven't logged into online banking in a while. Let me do that. Let me get registered. Let me engage with the credit union more digitally. And so since then, we've seen an uptick in mobile adoption and usage of our digital app, which has been nice.
So looking back and looking at the merger process and the day of conversion, all that, if you had to do it again, what would you do differently, or what would you focus on differently?
Well, this is may not the answer you're looking for, but what I would do differently is we had a year in between our legal day one of the merger and our system conversion, and I would shorten that time frame in any way I could, because essentially for 1 year we had to run two separate organizations on two separate systems, and that took a toll on our people. It took a toll on our members too, I think, just because there was some confusion or small differences that were difficult to explain. And so, it's difficult being a credit union our size, even right at 1.2 billion. We're a small fish, really, in the grand scheme of things. And so, working with these vendors to expedite that time frame is something that I would definitely work on differently next time.
It's interesting because I come from Cleveland, and that was a Continental Airline mini hub. It got acquired by United, and because they continue, I think still today, their staff, their on plane and plane crews are still defined by what organization they started in, because their benefits and everything else were different. But I would imagine it's very hard to set up as a leader saying we're one organization when you're running still as two. And on both sides, you have both sides, us versus them, and not in a versus side because you're trying to alleviate that, but it comes in your own mindset saying, "Oh, that's them." You're going to use that terminology. That's an interesting dynamic because as I heard you telling the story, you would think that would simplify the process by dividing up the time periods, but it really made it more difficult because you still had to take that bitter pill. It's still had to do that.
You're going to take your medicine no matter what. I'd rather take it sooner.
Well, as part of this process, you really reimagined the digital member journey. Um, how did that change the way that customers on both sides of OnPath saw their engagement happen?
So again, we really tried to take a best of the best approach. And so we didn't want to just automatically assume the way Louisiana Federal was doing things or the way OnPath was doing things was the right way. And so we wanted to almost line by line go through every system, every process, every policy, every product, and go ahead and make those changes. And again, it was overwhelming. We what we pulled off in a year, unfortunately, takes most credit unions 5 and 10 years to do. There were a lot of days where I was cheerleader. I was trying to just pump the staff up to continue on because the to-do list grew pages and pages every day, even though you marked off so many items in a day. And so it was really just keeping them motivated, keeping them encouraged to continue on because we had a goal in mind, which was make everything better for our members. And we have done that now, but it was a journey. It was a hard journey.
What's interesting is you expanded your membership overnight, even if it was a year between the legal and the non-legal thing, but you pretty much doubled your membership. How are you still able to deliver the personal relevant experiences at scale when you really have a much different scaling today than you did? And as I understand from early in our conversation, you're dealing with almost the same type of customer base. You're dealing with people that are very digitally focused, but they may not have the newest iPhone. They may not be at a 700 credit score. How are you balancing all that to make it so that you really stand out in a marketplace that tends to talk the talk a whole lot better than we walk the walk?
Right. To me, it comes down to black and white numbers, right? One of our goals is we track monthly what percentage of our members fall into that low income bucket, and we actually have goals around that. So if we were ever getting a situation where we're only doing a loan segment for a higher income population, for example, that would be a problem for us. We would pivot, and we would pivot quickly because we're tracking that monthly. We know month by month where those numbers are falling. I'll give you a very in the weeds example. We had a large commercial loan that came up last year in one of our service markets, and my first question was, hey, this looks like a great loan. It's going to make us a lot of money, but is this going to skew us from who we are? Is this going to put us because of the sheer volume size of this loan, is this going to put us in a group that we don't want to really be in? We want to be in this low income to moderate income group because that's who we are. That's who we've always been. I feel like it's a huge, huge need, especially here in Southeast Louisiana. So many challenges financially. And so we just had really clear goals on who we were and who we weren't going to be. The merger only helped us serve those members better.
With that said, and recently I've been really involved in some organizations and some relationships where I'm really talking quite a bit about the underserved communities, the people, the credit disparity gap, and all the things going on. And if the marketplace looks at that market correctly, it's the biggest opportunity out there in that 30% of your households have credit scores under 700. You also have more than half of your households could not make a mortgage payment or a rent payment if the next paycheck didn't arrive. How do you focus on that and make it really a strategic advantage in your marketplaces as opposed to being a burden?
Yeah, so especially on the residential mortgage side, which is a huge focus of ours here at OnPath, we have a heart and mission for creating generational wealth. And what I mean by that is we want to focus on families that literally, generationally speaking, have never had wealth, however you want to define that. We feel like homeownership is not the only tool, but a fantastic tool to insert generational wealth, and, affect a family for multiple generations. And so we're pretty focused on residential mortgage because of that. As a credit union, of course, we have all the tools to sell loans on the secondary market, but we also have wonderful portfolio products, first-time homebuyer products that allow us flexibility, that allow us to take maybe a little more calculated risk on an individual, because we also understand the challenges here in Southeast Louisiana. Flood 2.0 has been around. The whole country experiences flood 2.0, but for here for us in Louisiana, Southeast Louisiana particularly, that's a way of life. 80% of our homes require flood insurance to do a mortgage, and you're talking thousands of dollars a year. Well, we also have this issue here in Louisiana with homeowners insurance. We have some of the highest homeowner insurance rates in the country. California, Florida, Louisiana, we're really all kind of in the same bucket. It's very, very difficult. At one point, we got down to like 3 insurance carriers that would write homeowners insurance in the state, and one of those included the state run insurance carrier, which doesn't have a choice, right? But again, you're talking thousands of dollars a month being added to your mortgage loan and escrows. And so, like some other credit unions in our area, we have flexibility in helping our members out with that, maybe changing the terms or maybe doing some alterations or modifications. All of our mortgage loan officers, for example, have a list and Rolodex of insurance carriers, and we're proactively saying, hey, let's shop this insurance. We got the loan done, you're in the house, great. We didn't have a hurricane, praise God, this past year that affected us. We didn't have one last year either. And so let's see if we can shop it again before your escrow analysis comes up, and maybe we can lower that premium for you. And we're not waiting until they can't afford it or can't pay it. We're trying to be proactive with that.
That's interesting because it really is a cultural thing that you're going beyond simply the product to say, we want this household to be right, not just the product that we're selling. And during this process, you've obviously had to make a lot of technology partnership, third-party partnership decisions. How is the partnerships you made changed or made it so your vision has come to life, and so the organization is really moving forward at speed and scale to the degree you can?
Yeah, so particularly with the merger, for good or for bad, it is true. A vendor does treat you differently the larger you get. It's just economics, right? You have more money. It just is what it is. And so, we picked great vendors, great partners to work with on the front end. But also, they want our business too. And so we're able to negotiate, we're able to garner attention when issues go awry. And, that's going to happen. Issues always happen. And so, for example, I'll since Alchemy sponsored this, I'll toot their horn. We had a call with the CEO of Alchemy. He gave us his cell phone number. I haven't had to use it, thank God. but I would, if a problem occurred and we weren't not able to overcome a challenge or an obstacle, I would certainly give him a call on his cell phone number. He gave me his number, I'm going to call it, right? And so I think that's incredibly important, developing those relationships. And we want to do business with people that want to do business with us and have a shared sense of purpose in taking care of our shareholders who are our members.
Well, it obviously helps a little bit. You mentioned in passing that Louisiana Federal had Alchemy as a partner, and you were evaluating them as part of your partnership agreements. So that helped a little bit. That some of that learning curve was put in place. But transformation doesn't happen by technology alone, as you are well aware, because when you go through a merger, you realize, yeah, technology is the foundation. That's got to work right. But at the end of the day, you have to really make sure your teams are inspired, that they're working together, that they have the same North Star. How did you as a leader and how did your leadership team really embrace this as part of your overall merger and overall transformation to make it so that everybody realized what was on the line and how to get to where you had to go?
Yeah. Again, it sounds simple, and it is. It's just not easy. Um, Clarity and a shared sense of purpose. We get together with our employees 4 times a year in person, and I have to poke fun at my CFO, who I love dearly, and she's fantastic. We're always looking at how we can cut expenses, and every year she says, "We know we could cut out these quarterly frontline staff meetings. That costs a lot of money." And I said, "Absolutely not. It makes us money. This is my opportunity to get together with my 250 team members and talk about our purpose, talk about our vision, talk about our goals, hold ourselves accountable to where did we fall short last quarter? How do we make up the difference this next quarter? Remind people what our long-term goals are, our short-term goals are. Get excited and celebrate the wins too. We're New Orleans. We love to throw parties. Actually, today Carnival starts, which probably means nothing to the most of the country.
Oh, it's big.
But January 6th is King's Day, right? So there's king cakes already going around and all those different things. And so it doesn't take much for us to throw a celebration around here, but we definitely take time to celebrate the wins when they happen.
That's interesting because, as you mentioned, the CFO has their job to do. But the reality is, if you had stopped that any time during the merger, it would have been it would be on your label. It would be your brand that, oh, they say nothing's happened, but we loved this meeting. People tend to love what came in the past, especially if it goes away. They love it even more then. They make that the thing that is their hook to the whole process. As you look at this and what you've done, as you mentioned, the merger happened 2 years ago. Obviously, you haven't stopped innovating. You haven't stopped transforming. You haven't stopped the process of growth and scalability. What's on your agenda right now? What are you doing right now that's different? And has what you're doing right now, has the time period of what it's going to take to get them done changed because of what you could see, what you did when your merger happened? In other words, you found that you did it in a much shorter period than many organizations do. Has that changed your timeframes?
Yeah, so I'll give you an example. June of 2025 is when we did our systems conversion, operational day one, if you will. Our next all hands on deck quarterly staff meeting was the 1st of July, right after 4th of July. And at that meeting, I announced to the whole staff who had just gone through this core conversion, answered thousands of phone calls, that we were going to buy a bank. And so we actually go live with that bank purchase this year. We're very, very close to receiving regulatory approval. We went public with the bank acquisition some weeks back, and hopefully by April 1st, that bank will be joining us, and their customers will be joining us as members. And we're in fact doing legal day one and operational day one same day.
Wow. There you go. That's called correcting a problem that you saw in the past.
Which is both exciting and maybe a little crazy.
It's interesting. It's getting back to the conversation we had. And I said, you decided to jump in the deep end as opposed to going in the shallow end, dipping your toes in. But the reality is you've done it before. And you're, as you mentioned at the very beginning, this is not for growth. It's for mind share. It's for branding. It's to make it so that you can actually serve more members better than you did before. When you look at a strategic decision or an operational decision, maybe it's new account opening, maybe it's working with your commercial clients, maybe it's something in the mortgage area. What's one of the back office things that the customers or the members are going to feel in the next 12 months?
Yeah, so great example, the bank. So the reason we bought the bank is really the one thing they're really good at is residential mortgage. And not only that, but they have all these government programs, bond programs, different things that help with affordability of buying homes. And they have the staff and the systems in place to service those loans really, really well and maintain and manage those relationships so that our members aren't having to call someone else if the loan's been sold to or whatever. We really want to service those loans ourselves because nobody understands Southeast Louisiana like we do. And so the bank is bringing a lot of that to the table, and it was a huge and the main driver behind the purchase of that bank. So our members are definitely going to see a huge improvement and mortgage offerings and service on the mortgage side post closing, which we think will be a great value.
That's interesting because it isn't about size. It's around capabilities. It's around how do we, just very much like your third party partnerships, that you say, how can we make our organization better, not just bigger? And bigger almost becomes a secondary item that says, oh, we're also going to acquire an organization to get there. But it really looks at, you're looking at where your weaknesses are. You've been at your organization for quite some time. You've grown up with it. The organization's grown up with you. And so also change becomes part of your identity and part of where these members and your employees really grab onto. It becomes something that, claim to fame, but it also is that, you're not standing still.
We see it a different way. We see that standing still actually means going backwards.
Well, it is. When the train's moving forward, if you're at the station when it leaves, you're getting further behind every day.
Yep, absolutely.
That's exciting. For those who are watching your evolution, what advice would you share around leading fearlessly, embracing change, and actually shaping the future of community banking in your markets?
Yeah, I would say this. I've been in this industry now for 2 decades, which again is really hard to wrap my head around sometimes. But I have more than 2 decades left in this industry. And I want to be relevant at the end of those 2 decades. I want my legacy to be one of progress and that I'm proud of and that my daughter's proud of. And so I don't want to retire from here in 20 years or 25 years and go, gosh, well, now it's somebody else's problem. I want somebody to walk into my office whenever that time comes and go, gosh, I better up my game because I got big shoes to fill. And so for me, it's all around intense focus on why I exist and what my purpose on this earth is. And I've always been super clear on that, thankfully, and surround myself with people who share that same purpose.
It's interesting because as you establish your North Star and as you live to it, it becomes a mission that is fun. It's as you said, you're doing this for your daughter, for your family, for your employees, for your members, but more importantly, you're doing it for yourself, and you can't have those be in different paths. And we see the difference. We see it more in smaller organizations. I encourage everybody to listen to a number of the Visionary podcasts we've had, because the one thing that's been clear in every single interview we've had is the leaders are living what they're saying as opposed to simply saying it. No one's, building a false narrative around what they do or what their importance is. And the reality is the focus is on others. And every one of the interviews we've done for the Visionaries podcast illustrates the importance of leadership for any of this stuff to happen. You would not have been able to have 2 organizations come together successfully with people having a singular vision unless you had that singular vision. And, we can easily, you said 20 years left. I know that feeling because I went through a major period of saying, I don't want to become irrelevant. You use that word. And it's one of these things that you can easily pat yourself on the back and say, I did it. I'm doing well. Why change anything? Well, the industry quickly gets back at you for doing that because you can't hold on to the past. And I think one thing that comes out of all this is the third-party partnerships enable a company at $1 billion assets to do almost the exact same things technology-wise, back office-wise, transformation-wise as the biggest financial institution in the country or in the world. That is something we didn't have 15 years ago or even 10 years ago. The ability to build at scale in a way that makes us so you're digitally relevant, so you can use data on your members to actually build better experiences. And again, to toot your horn a little bit, the fact that you haven't lost what you're saying your differentiation in the marketplace is, which is you're going to serve the people that are underserved in your communities, and you're building around that on not only the mortgage business, but just on daily digital banking experiences, says a lot for your organization. Before we get off the call and off the podcast, for those of you who are watching as opposed to listening, What is that picture in the background?
Yeah, I'm glad you asked. So this a local artist here in New Orleans drew this, and it's actually a boat affiliated with our original SEG group here in the New Orleans area, and it's actually the boat that was used in World War II in the beaches of Normandy, and so it's a great legacy. Here at OnPath, when a new employee starts, we actually do a champagne toast at the end of their first day here, right here in my office. So every new employee gathers around, and I welcome them to the organization. But we always focus on that picture, and we remind people where we came from. We don't stay there because we're moving forward, but that is our roots and that's our foundation, and we honor that.
Jared, this has been a treat to meet you, to hear about your organization, hear about your journey, to realize that even if you think it's going to be smooth, it's not. Even though we think we have all the answers, we find out very quickly we don't. And the fact that listening to your teams, which you obviously do on a regular basis, and hearing what they're saying is the biggest way that we can build ourselves and our companies for the future. You're obviously doing quite a good job down there and impacting the community, which is important at a time when we could easily just turn the page and go on to the next money-making opportunity, as opposed to saying, you know what, I'd rather take a lot of small bites than one big bite to make our numbers. So thank you so much for being on the FIsionaries podcast.
Thank you.